What if a software company became America's biggest Bitcoin bank? That's exactly what MicroStrategy, now rebranded as Strategy, has done. Today, we're diving deep into how they pulled off this $100 billion bet, the risks, the rewards, and what happens if it all comes crashing down. We'll break through the funding mechanisms, walk through their Bitcoin buying timeline, compare them to other corporate holders like Metaplanet and GameStop, and even look at Michael Saylor's personal stake and the controversies surrounding his strategy. If you're into tech, finance, or just love a wild business story, this is a video for you. Michael Saylor is a tech pioneer. He co-founded MicroStrategy in 1989, fresh out of MIT, with a vision to help companies make sense of their data. For decades, MicroStrategy was known for its enterprise analytics software, tools that help big businesses turn mountains of data into actionable insights. So this was like Palantir before Palantir. Saylor built the company into a leader in business intelligence, serving giants in retail, finance, healthcare, and government. By the late 1990s, MicroStrategy was one of the hottest tech stocks around, riding the dot-com wave to dizzying heights. But the early 2000s brought a crash, and not just for the market. MicroStrategy faced an accounting scandal, and the stock plummeted. Saylor and his team weathered the storm, rebuilt, and kept the company alive, focusing on its core software business. Fast forward to 2020, the world was in chaos: COVID-19, massive government stimulus, and fears of inflation. Saylor saw a problem. Cash was losing value fast. He needed a hedge. That's when he made his big move. In August 2020, Saylor announced that MicroStrategy would start buying Bitcoin as its primary treasury asset. The initial purchase? 21,454 Bitcoin for $250 million. This wasn't just a side bet, it was a fundamental shift in strategy. Saylor believed Bitcoin was a superior store of value, digital gold for the modern age. So now let's ask the question, how does a software company afford to buy tens of billions of dollars in Bitcoin? So MicroStrategy, they used three key tools to fund its Bitcoin buys. First, convertible bonds. These are 0% interest debt that can convert to stock later. Since 2020, MicroStrategy has raised over $7 billion this way. For example, in November 2024, they sold $3 billion in convertible bonds at 0% interest, which is like a huge deal in corporate finance. The second way they fund their Bitcoin purchases, something called stock offerings. At times, they sell new shares to raise money. In June 2025, they raised $112 million by selling preferred stock, which avoids diluting common shareholders. This money was used to buy 1,045 more Bitcoin. And the third way they fund their Bitcoin buys, cash flow. Their software business still brings about $120 million per quarter, which a lot of people don't even know. While this is a small part of their funding, it still helps cover smaller Bitcoin purchases and ongoing expenses. So why does this all work? Because MicroStrategy's stock trades at a premium to the value of its Bitcoin holdings. This lets them raise money cheaply, buy more Bitcoin, and keep the cycle going. But here's the catch. If the market turns, if Bitcoin price drops or the premium on their stock disappears, the whole cycle could break down. We're going to come back to this. We're going to talk about the risk a little bit later on. Let's walk through MicroStrategy's Bitcoin buying spree year by year. In August 2020, they made their first purchase, 21,454 Bitcoin for $215 million. From 2021 to 2023, they kept buying, even during the bear market. By the end of 2023, they held over 226,000 Bitcoin. In October 2024, they unveiled the 2021 plan, aiming to raise $42 billion by 2027 to buy even more Bitcoin. In December 2024, they bought 45,370 Bitcoin in 1 month, capitalizing on market volatility. Now, as of June 2025, time of this recording, they hold over 582,000 Bitcoin, worth about $64 billion at current prices. Now, something to keep in mind, Michael Saylor doesn't touch Ethereum, he doesn't touch Ripple, he doesn't touch Solana, he doesn't touch any of the other stuff. Just Bitcoin. So Strategy's average purchase price is around $70,000 per Bitcoin. At current prices, which is about $110,000 per coin at the time of this recording, that's an unrealized gain of about $40,000 per coin. That adds up to more than $23 billion in total unrealized gains. In 2024, MicroStrategy announced the 2121 plan. It's a bold strategy to raise $42 billion by 2027 to buy even more Bitcoin. By early 2025, they already deployed $29.4 billion toward that goal. Now there's talk of a 42-42 plan, doubling that target to $84 billion. So what's the goal here for Strategy and Michael Saylor? Well, they want to control 4% of all Bitcoin, which is like 840,000 coins. This strategy only works if Bitcoin stays above $70,000. If the price drops, MicroStrategy could face huge losses. And if they can't repay their debt, they might have to sell Bitcoin at a loss, which could trigger a vicious cycle. MicroStrategy isn't the only company making big moves in Bitcoin. In fact, a handful of other public companies have been following a similar playbook, using their balance sheets to buy Bitcoin as a treasury asset. Let's start with Metaplanet. Metaplanet is a Japanese company that's been called the MicroStrategy of Asia. Right now, they hold about 8,900 Bitcoins. Their strategy is pretty straightforward. They're raising money through stock sales in Japan to buy even more Bitcoin. They've announced a plan to eventually hold 210,000 Bitcoins, which would be about 1% of all Bitcoin that will ever exist. But there's a catch. Japan's market are a bit different, and liquidity can be limited, so it's not always smooth sailing. Next up, GameStop, which you probably know from the meme stock craze a few years ago. Well, in 2025, GameStop decided to jump into Bitcoin too. They made a $500 million initial purchase, which gave them just under 5,000 Bitcoins. The stock market's reaction was mixed. GameStop's share price actually dropped about 3% after the announcements. This shows just how risky these kind of moves can be, especially for companies that are already known for wild swings. Not only that, June 12, 2025, pretty much the time of this recording, GameStop fell 22% this morning, following an announcement that it plans to issue $1.75 billion in convertible senior notes. Then there's Tesla. Tesla made headlines a while back when they bought about 11,500 Bitcoins as part of their treasury. But unlike MicroStrategy, Tesla hasn't been so aggressive. They've actually sold some of their Bitcoin in the past, and their holdings have stayed pretty steady. Still, Tesla's moves are always watched so closely. So why are all these companies doing this? Basically, they see Bitcoin as a hedge against inflation and currency risk. With the US government trillions of debt, they're betting that Bitcoin will hold its value or even go up over time, which could protect the cash reserves. But as we've seen with GameStop, these bets don't always pay off right away, and they can be really risky for shareholders. So that's a quick look at some of the other big players in the corporate Bitcoin game. Next, let's talk about MicroStrategy's original business, the software side, and why it still matters. MicroStrategy's legacy building is still alive and kicking. They make enterprise analytics software, tools that help big companies analyze their data. They also offer cloud services, which account for about 8% of the revenue. In 2025, the total revenue was about $464 million, down a little bit from $474 million in 2024. They reported a net loss of $16.49 per share, mostly due to Bitcoin accounting changes. Their software business funds less than 5% of their Bitcoin buys. It's still important for legitimacy, but Bitcoin is now the main focus. So let's talk about Michael Saylor himself. He owns about 9.9% of MicroStrategy. That's almost 20 million shares. He also personally owns 17,732 Bitcoins, worth about $1.9 billion at current prices. There have been some controversies. In 2025, investors filed a class action lawsuit alleging Saylor misled them about Bitcoin risks. He also sold shares to exercise expiring options, raising over $1 billion. And some critics say the company's model relies on new investors to keep buying Bitcoin, calling it a Ponzi scheme. Saylor's defense, in his own words, is that they're not a closed trust. They're a business generating Bitcoin profits. But is this sustainable? Some analysts worry that if the music stops, if new investors stop buying in, the whole model could collapse. Others see it as a bold new wave to build a digital asset company. So what happens if Bitcoin crashes? If the price drops to $15,000, MicroStrategy's Bitcoin would be worth about $8.7 billion, but they'd still have about $40 billion in debt. They might have to sell Bitcoin at a loss, which could trigger a death spiral. There's other risks too. New accounting rules, SEC lawsuits, and regulatory scrutiny could all impact the company. Bitcoin ETFs are draining institutional interest away from companies like Strategy. And if confidence in Bitcoin decreases, the premium on MSTR stock could vanish, making it harder to raise new funds. If Strategy can't keep raising money, it might be forced to sell Bitcoin at a loss, which would further depress the price and trigger more selling. It's a classic death spiral, and it's happened to other companies in the past. Strategy's strategy has made it one of the most talked about companies in finance. The crypto community loves the boldness, but analysts are split. Mainstream media calls it a gamble, while some investors see it as a genius move. So what do the experts say? Some analysts compare it to the early days of Amazon or Tesla, a bold bet that could pay off big. Others see it as a dangerous bubble waiting to burst. But what about the crypto community? Well, many see strategy as a leader in corporate Bitcoin adoption, but some worry that if it fails, it could hurt Bitcoin's reputation. Before we finish this video, please take a moment to subscribe if you haven't already. It really helps the channel grow, and you'll get more deep dives on tech, finance, and business news just like this one. Thank you. So what does the future hold for MicroStrategy and other corporate Bitcoin holders? Saylor's vision is clear. He wants MicroStrategy to become a Bitcoin bank, a merchant bank for the digital age. He believes Bitcoin could become a $200 trillion asset class, serving as a global settlement layer for the AI-driven internet. But is this realistic? Some experts think it's possible, especially if Bitcoin becomes widely adopted as a reserve asset. Others think it's a pipe dream and that risks are way too high. What about other companies? More and more companies are looking at Bitcoin as a treasury asset, but none are as aggressive as strategy. If Bitcoin succeeds, MicroStrategy could become a financial powerhouse. If it falls, it could be a cautionary tale for the ages. MicroStrategy's bet is bold, risky, and unprecedented. So there are some things Strategy and Michael Saylor have going for them that they never had in the past. The question is, where is Bitcoin going? Would you invest in MSTR? Let me know in the comments. And don't forget to like, subscribe, and hit the bell for more deep dives on tech, finance, and business news.